In this video we will discuss about types of accounts in accounting. The word accounting has several connectionaries, but it most and instantly remained us of our most possessed and guarded personal entity, that is our bank accounts. However, in the accounting world, an account refers to an entity that records the financial activities or transactions of a specific assets, acquired liabilities, or expense revenue. All the changes of the account and recorded in the general ledger throughout the business year. Financial statements are created based on these. This is how finance firms track records via these individual accounts. These financial records are the paramount importance to a company as it gives a complete and insightful overview of the credit and debit entries. A company can thus make informed decisions using this accounting data that thereby create a healthy and profitable output. Financial accounting is based on the principle of duality, which means that every business transaction must be recorded in two different accounts. This accounting framework enables more security and correctness in extracting transactional reports and create a foolproof accounting system in the firm. Thus, in this word, the double entry system is usually a default in creating accounting books in finance. With this dual accounting concept, each business transaction will have a corresponding and opposite record in the last two accounts. The main types of accounts, there are three basic types of account: personal account, real account, monimal account. Personal account, as the name suggests, personal account refers the people. This broadly refers to an individual or a firm, group, associations of people, internship firm, etc. Personal accounts are further classified as natural accounts. A natural account is related to natural person such as Mr. Sharma's account and Deepak accounts. This usually indicates that the account is of an individual with a valid identity. Artificial account. An artificial account refers to a company, group, or institution. These are legally valid entities and represents a company or institutions. Representative account. A representative account is usually created for representing a specific task or work like prepaid expense, salary account, outstanding interest, etc. Personal account have a baseline rule: debit the receive and credit the giver.